back. You're watching Investors Guide on ET now. Subhash Lakhoti is our tax expert. We've asked him to join us again this week because of the questions we got through the week. Subhash, thanks so much for agreeing to be part of Investors Guide again this week. Our first question is from Sunil Das, who writes in from Kolkata. He tells us he owns a plot of land in a rural area and he wants to sell it now. And he wants to know where he can invest that money so he can save on tax. He wants to know if government bonds are a good choice right now.
Yes, Mr. Das. Nice to find that you are going to sell some of your rural land and you get a capital gain. And naturally it will be long-term capital gain. For last so many years you must be having this land and now you want to sell. How to compute capital gain and what are the formalities of the payment of the taxes, whether has there any possibility of saving tax. These are the common points. Number one, please do remember, when you sell the rural land, etc., agricultural land, we presume it's near the town, near some city, etc., where there's municipality limit, municipality is there. In that situation, the gain arising will be treated as long-term capital gain. But by chance, if you sell such a land which is far, far away from the municipal limits, etc., and the population is much lower than 10,000, etc., etc., then there will be no liability to capital gains. But as I could see, I feel that you will be selling the land which will be coming within the purview of the capital gains tax liability, and to save tax, one single formula is invest the entire sale consideration. That is, invest the entire sale price in buying a new property. Yes, please do remember, not the gain amount, full sale price. If you make the investment in new property, then there is no liability to tax at all. But by chance you are not interested to make the investment in new property, then what? Then pay tax. And you don't want to pay tax and also not interested to invest in the property. You have got one more choice, and that is, please invest the amount of the capital gain under capital gain bond. Yes, if you make the investment in capital gain bond, then also you are able to save your capital gain.
Our next question comes in from Arun Tiwari, who's 37 years old, and he's just made an investment of 1 lakh rupees in a national savings certificate to save tax this year. Now, he wants to know if it's a good investment or should he choose the ELSS or the Equity Linked Savings Scheme instead. Well, Arun, first of all, you've already made the investment and you've topped up your 1 lakh limit under Section 80C. So I don't know if you can make any changes. But let's ask Subhash what you can do if there's anything you can still do. Subhash.
Hi, Arun. Good question. But bad investment by you, I feel so. I feel that it is no good to invest your money under NST scheme of the post office to save your income tax. The best, I feel, would be to invest in ELSS, Equity Linked Savings Scheme. But so long you have been investing only in NST, don't worry. Whatever investment you have made at the time of maturity of this amount, the maturity amount will not be taxable. That means the principal amount invested in NST will not be liable to income tax at all. But the interest which is accrued year after year is liable to income tax. So Arun, do not forget to include the income. Yes, income from NST. That is, the interest on NST should be included on year-to-year basis in your income. And again, let me tell you, I personally feel that your investment would be better if you make the investment under ELSS, or you want chup-chap secured investment, then go in for PPF investment. That I feel is much better than NST investment, mainly because of the fact the interest under NST investment is liable to be added to your income. You have to pay tax on the interest income accruing from NST investment. Whereas if you make the investment under PPF, the Public Provident Fund, the interest income is completely tax-free. So enjoy, relax, save income tax, and plan your investment.
Alright, that's a wrap on this show. Subhash, thank you so much for answering all of our questions. Remember, if you have questions for our experts on anything to do with your money, you can write to us on the email ID at the bottom of your screen. Next week, We're doing a special for Independence Day. It's called Freedom from Debt. We're basically going to try and help you with your loans with the higher EMIs and the higher interest rates. Any loan that you want help with, write to us. We'll have experts in the studio to help you rationalize all of your debt. That's happening next week. So tune in to Catch Investors Guide. Thanks so much.